This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro. Happy New Year to everybody. We're going to get into the market. I want to go through all the market conditions and look at the S&P in multiple time frames. Maybe even take a peek at the Dow Jones because I do think that is an important index right now. Let's go ahead and get started on this. First, I just want to make mention, if you have an interest in learning more about MACD and ADX in multiple time frames, I would suggest starting with the book. I'm offering at a discount right now. You can go to rabilstockresearch.com/book to get more information on that. Okay, so the market again had a down day. I mean, the Dow Jones eked out a small gain. I am going to show the Dow very briefly just to give you an idea of why I like it and the look of it. But let's go through these market conditions real quick. The sentiment did pop up again. All right, we're now at 40%. All right, now the higher this number goes, the more risk there is in the market. But anything over 35%, we've been talking about, was an increase. So this is a difference between the bulls and the bears. This is coming from Investors Intelligence. And just for anyone new, they were clients of mine years ago, the guys at Investors Intelligence. I know them very well. I've been following this specific sentiment indicator for more than 30 years. I know it inside and out. You get a comfort level. That doesn't mean that that's what you have to use. You have to have some method of measuring sentiment. I don't know. You might be able to find, I know there's a bunch of good indicators, and I certainly, the guys at Stock Charts have some good ones as well. So, find one that you're comfortable with, learn it inside and out, go back historically. If you don't have the history with it, like I have the history of watching this play out in real time for more than 30 years. So I know kind of what I'm looking for. And when this gets over 35 to 40 like this, there's definitely more risk. And I categorize this part of the market conditions as negative. All right. Now, we were overbought last week on a overbought, oversold oscillator on the S&P RSI. And now it's dropped down under 70, so it's a 67. So I put it back to neutral. But when we have these two like this, negative, because this was up at 80 or something like that, in the 80s, mid 80s or something like that, and we have bearish sentiment or bullish sentiment, which is a bearish thing, then we should be on the lookout for a pullback. And that's basically what we're getting. The fact is though, all the other conditions are still in pretty good shape. The volatility is not increasing. I'm going to go into that in a minute, and the trends are still okay. Now we have, I've moved both of these momentum indications for both the monthly and the weekly to the far end of positive. They're still positive. I want to explain why, especially on the daily, why I have moved this over. I wouldn't call it neutral or negative yet, but I don't think it's quite as bullish as it was. But generally speaking, we're still in pretty good shape. I like the fact that it's broadening out into other areas, other sectors, more than just focusing in on tech. So that's where we stand when we look at the conditions themselves. Let's start to go through and look at the charts. And let's start with the weekly ATR. So this line in red is the average true range of the S&P. So it's the range of the weekly average of this move. So all these bars, we're looking for how big is the range, and is the range getting bigger or is it shrinking? And if it's shrinking, that's usually a bullish sign. And if it's below its moving average, so this red line being below the blue line is a positive. And that's why I've marked both volatility on both the weekly and the daily, which are both in the same position, declining below their moving average. And I'm using an 18 MA on both of them, are bullish, and they really have been for, really for the better part of about 6 to 8 weeks. And basically for all of 2023, the weekly average true range has been declining. All right. Other than that one little pop there above the moving average that turned it neutral, for the rest of the year, it has been categorized as positive. All right. Now, I do have on this system, I have put in the 18s on here, and we can see what's taking place. We've broken the 18 on the daily time frame, okay? But that line is still rising, okay? So it's a break, but it's not really an official turn in the trend or a shift even to neutral right now, and that's why I'm keeping it still on the positive end. On the positive side. But look at the distance between the 18-day and the 18-week. You see that separation there? So we've got a little bit of an opening you can really see on the weekly, and I think there's probably a little bit of risk here when we look at it this way. We came up to the high. I actually think it's a positive that it didn't eke out a new high first. Then I think that maybe the risk of a more blatant or violent decline could take place. This, I think, is more of an orderly correction. I mean, this is kind of a rough start to the week, but I don't see any real damage being done to this pattern. It was up 9 weeks in a row. It got way overdone, and we lost momentum right at the end. We had a little narrow range bar right to end the year. So it just makes sense to have a little bit of a downside expansion. All right. And so should be some support around 4,600. So when we look at this, let me just expand this just so you can see kind of where we're coming from. You can see that this is the yearly 18. This is the quarterly 18. That's the 18 month. This is the 18 week, right? So we've got a little bit of a breathing room, but every one of these lines are supporting the uptrend. We've got rising lines across the board. If you're calling for the market to really drop here, you're kind of guessing in a way. You're forecasting because the trends aren't telling us that. We don't have that, and we don't have that evidence. Now, if we had a massive loss of momentum on the way up, then maybe we could say, okay, you know what, this could come down a little bit harder, but we don't really have that. All right. So other than a little bit of momentum loss on the daily, we really don't have that much damage being done thus far. All right, so let's go ahead and start looking at the trends. And I am going to start out with the Dow Jones because I want you to focus in on what's going on the monthly and the weekly. If anyone saw or you should hopefully are watching my show on that came out on Thursday, yesterday, called Stock Talk for Stock Charts TV. And I go into this at the beginning of the analysis on the individual symbols. And notice this low ADX condition on both the monthly and the weekly. All right. And then what we do is we get the ADX to start kicking in on the weekly, coming out of a basing pattern. All right. This is a very dynamic pattern. This is very, very dynamic. Notice this turn in the MACD hovering above the zero line. It's been working sideways and this is turning up. I mean, this is a very strong setup. So I think if we're going higher, I think the Dow Jones is going to lead, and I don't think the leadership is going to come from the Qs or anything like that. We had that was really the leadership last year. I think right now, if you go through and look at some of the dynamics and some of the strength of the moves in the Dow Jones stocks, some of the stocks that didn't do anything last year, just like the Dow Jones didn't do anything last year, all of a sudden starts to kick in at the end of the year and maybe have a little follow through. I think if we get any kind of an orderly little pullback, that's something we want to be on the lookout for here. All right, let's go and take a look at the spider. Nothing's really changing on the monthly. It has had a couple of good months to the upside. Now, it's possible that pinch play, because this was such a big bar, maybe it just played out in 2 bars and we made it to the high and that was it. I don't know. I'm not really convinced that's the end of that pinch play. But at the same time, it's not like it's not a bearish trend. In other words, the momentum is not bearish, but it's not all that dynamic either. If we had strength like this, then we could be looking for a lot more follow through. I think it makes more sense that we should be expecting some consolidation in here. Maybe take a breather just to start the year or something like that, just based on the fact that we don't have that much momentum yet. We have had a couple of good months, especially to finish off the year. Now, if we take a look at the weekly, 8-9 weeks in a row, and then the final week, I mean, we actually started losing momentum the week before, and then the final week of the year, it was just a tiny little narrow range bar just underneath the highs from 2002. So there's no real sign of problems here. I don't see anything wrong. Remember, this is a reset, so we don't want to call this divergence. So far, so good. We're confirming the move, right? Now, if we pull back and we go to another new high and these don't confirm there, then we'd actually have divergence in place. So that's how we want to be on the lookout for this going forward. Right now, the problem we've got is we've got this air pocket. We've got a little bit of this because of this made such an accelerated move. We've created a little bit of an opening for a pullback, and we are breaking the 4 here in the short term. That leaves a little bit of an opening. I mean, we could, and I think the likelihood is we probably will spend a little bit of time consolidating. Let me just go back to this ATR chart real quick and explain something. So we've gotten the short-term overbought, oversold indicator. So the daily is on the RSI has gotten oversold, okay? But look at how much room we have to get to neutral here. I mean, if we're going to get back to 50, it's still got some room to drop on the weekly chart. So I think what could happen here is because we've gotten oversold, we could rally up and then we could do some kind of an ABC or more complex correction on this time frame, and that allows for this to come down a little bit more and work this down to at least the neutral mark. I'm looking for this to come down to at least neutral before this is going to be ready to go again. Now let's just focus in on this daily chart briefly. Because what I want to point out is we had a little bit of divergence, and we showed it on the RSI 5 too, but MACD diverged. We had a divergence in DI, but more important to me now that we've made this lower low, we've also made a higher bottom and a higher high in the DI line, and a lower low, a lower high and a lower low in the green DI. You see how these are coming together now? This is a contraction phase. So this is expansion through here. This is moving up and trending to the downside. These are expansion. Now we're going through a contraction phase. Basically, as we start the new year, really end the new year, we started to lose momentum. We get confirmation as we start the year that we're going into contraction. And that suggests to me that this pullback is not going to be quick. It's going to take some time. We're going to have to consolidate some. So we want to use this to our advantage. I think a lot of people aren't sure how to handle this type of pullback. Should they be buying right now? I think you have time to watch this because this has gone into this phase and we're breaking the 18 on the daily. We can spend some time. So the way you want to handle this now is focus in on the hourly. And I'm not saying we want to trade off the hourly, but there is nothing that's going to happen while red is in control. Nothing to the upside. All right. We're not in any kind of a big hurry to be a buyer here because this is showing strength. Now, just because green breaks out, let's say this tries to turn and green turns up on the hourly, that doesn't necessarily mean we want to be buyers, but we don't want to do anything until we see improvement on this time frame. So let's just say we come down a little bit more and we come to the 40 and then we get a turn here and the green starts to kick in. Well, that doesn't really set up a really good play because all we're going to do is rally up to the 18 most likely. Okay, so we still are letting these time frames drive our opinion on what's going on, but this is going to help us with the timing. There's not a whole lot to do if this is like this, there's really no buying that should be done. So, and you want to handle this on your individual stocks the same way. So we're looking for this opening to get filled a little bit. We're looking for this to take a little bit of time based on this contraction pattern. And then I think based on the overall setup, I think there's going to be some pretty nice patterns that'll develop if in fact it plays out the way I say, which would be an ABC kind of corrective pattern over the course of the next, say, 2 to 6 weeks, something like that. All right, so that's the update for the week. We'll see you next time.